What's up, bros? Today I'm going to tell you how to invest in the stock market for beginners. Stock investing has been more accessible in recent years, with newcomers able to start an account with a little money using a brokerage's website or mobile app. A stock symbolizes a common shareholder's ownership stake in a corporation. Shareholders of common stocks can vote on corporate issues, with most companies allowing one vote per share. Some corporations also pay dividends to stockholders, providing a source of income in addition to the stock market's value. These payments are usually adjusted according to the company's profitability. The S&P 500, a stock market index that includes some of the most well-known businesses, rose 27% in 2021, thanks to gains in Meta Platforms Inc., ticker FB, Apple Inc., AAPL, Microsoft Corp., MSFT, and Alphabet Inc., GOOGL. If you had invested in these firms or the index as a whole through an index fund last year, your money would have grown significantly. Stocks are a high-risk asset that can help an investment portfolio expand and generate income. This indicates that it is an asset class with a high level of price volatility. When it comes to equities, novice investors must assess how much risk they are willing to face. In general, the higher the risk, the higher the possible profit. However, investors must be willing to risk losing money if big returns do not materialize. Over time, stocks have shown to be a stable asset class with significant annual average returns. Where should you begin investing in stocks? The first thing you need to do is open a brokerage account. This account is required to make stock market investments. The next step is to fund your brokerage account by sending funds from your bank account to make stock trades. The quantity of money you invest is determined by your risk tolerance, ambitions, and the amount of money you're willing to lose. Keep in mind that, while the stock market normally improves in value over time, there can be short-term market volatility that put your money at danger. How much money should you put into the stock market when you first start? Several online brokers, including Betterment, don't charge fees if you have no money in your account and don't require a minimum deposit to create a trading account. With these brokerages, you can begin investing with any amount. Some companies also sell fractional shares, which means you don't have to buy a complete share if you can't afford it. Whole shares of Amazon.com Inc., AMZM, for example, cost more than $3,000 in early 2022. Thus, fractional shares make the stock more accessible to the general public. Discount brokers are a godsend for low-income investors who want to get a taste of the stock market with small portfolios. A cheap broker, on the other hand, rarely offers guidance or analysis. Many of these brokers don't demand a minimum deposit to open an account, while others have a $1,000 minimum deposit. Have a plan for investing, especially when markets are volatile. The stock market is prone to periods of extreme volatility. Stocks, especially those that are thought to be reasonably safe, face price changes at these times. This can happen when there is market uncertainty and is usually short-lived. Over the long run, we have witnessed a 10% or higher drop in the stock market more regularly than once every 2 years, on average, says Daniel Beckerman, president of Beckerman Institutional in Oakhurst, New Jersey. If you want to do well over the long term, you should plan to be invested during these difficult times, according to Beckerman. Volatility can be frightening, especially if you're a novice who hasn't dealt with it before. Having said that, you should invest in companies that can continuously grow their revenues and profits over time. That way, despite the stock's price fluctuations, you may have faith in the company. According to Samir Sawakid, host of The More We Know, a podcast for Generation Z investors, time is the most valuable asset young investors have. Gen Z investors can raise their risk exposure since, even if the market goes through a slump, we still have 40 years or more before retirement to recover. As a result, we're able to take on greater risk, he explains. When a company's stock price declines, and investors have faith in it, they may see this as a chance to buy more of the stock at a lower price. Which investments should you make? According to Beckerman, looking at a company's measurements can give you insight into how organizations and industries are doing. For example, we can get a sense of when certain stocks or industries are valued in bubble territory, when price earnings or price sales ratios are inflated, he says. When it comes to stock selection, valuation is crucial. When determining whether a company is undervalued or overvalued, investors must analyze criteria such as profitability, earnings growth potential, management quality, and industry performance. Stock prices, according to Beckerman, give investors some insight into the sentiment towards specific sector groups. The price of a stock may differ from its intrinsic value. Investors must dig into the company's financial reporting history, comprehend the company's significance in its industry, and how it compares to its competitors, among other things, to determine how to value a stock. When it comes to stock investing, there are two methods to make money: selling shares when their market value rises and receiving dividend payments. Dividends are payments paid by a firm to its shareholders in cash or shares on a monthly, quarterly, or annual basis. Dividend payments are a mechanism for a publicly listed corporation to distribute its profits to its shareholders. Investors who seek a consistent stream of income from their stock portfolios should look for companies that pay dividends. Stay tuned for later parts of this series. Remember, you're awesome and doing great. Stay Gucci, my brothers and sisters.